We're going through a time of unprecedented change, economic change, societal change, with huge personal healthcare challenges that touch each of us. And those economic and societal challenges touch every one of our customers as a bank. So as a bank, we're at the center of much of this dialogue and discussion. We're listening, we're responding, hopefully, and more importantly, we're proactively advising customers and prospective customers on how to get through this and how to navigate this unprecedented change. I'm Marianne Scully, and I'm the Chairman and CEO of Howard Bank. In times of unprecedented change, we're reminded that change is really a constant. It's not new that we're dealing with change. And it's important, therefore, I think, for business owners and business executives to constantly be prepared for change, including the change that you cannot see, to be thinking about contingency plans, to be thinking most importantly about capital, financial capital, human capital. How are you going to prepare for those changes? Because if a transition comes upon you and you're unprepared with any sort of thoughts, yet alone plans for how to deal with a new, more volatile, more uncertain, more complex, more ambiguous environment, you're going to be caught flat-footed. And one of the great things about working with a bank as part of your strategic advisory team is that banks have perspective. We've got the perspective of time. Expert advisors implies correctly that we've done this before. But we're also advantaged, and that's an advantage that you have access to for free, by the perspective of having looked at a lot of different companies and looked at a lot of different solutions and knowing some that worked and some that didn't work. So I think it's really important to be thinking ahead. Don't wait for the change to happen. Know that change will happen, and prepare yourself with advisors who can help you navigate that change. In a world of predictable change, there are some constants, however. And one of the constants that all owners and senior executives focus on is how to maximize the long-term valuation of their company. And that needs to be a consistent focus. There are certain principles that ground valuation. It should be about value-added activities. It should be about sustainable activities, and it should be about the long term. So, for example, companies that are only focused on the short-term bottom line and consistently and relentlessly manage a bottom line only through expense reduction are not adding value and are not engaging in sustainable activities. At some point, as you're cutting away fat, you hit muscle and nerve. And those sorts of value-building activities will naturally fulfill that goal that you have in any environment of, am I maximizing the valuation of my company? Again, there are advisors that can assist you with that. At a broad level, banks can talk to you about things that you should be doing, as well as things that in the long term you shouldn't be doing that will affect the valuation. More importantly, banks can introduce you to those who spend all of their time on valuations and can help you understand the detailed mechanics and logistics of increasing the valuation of your company. Banks are often asked by small business customers to provide an advisory role. That's fortunate. It indicates their acknowledgement that they need a partner going forward. One of our first pieces of advice in that role is to advise our small business customers that they need a team of partners, however, and a team of advisors. At a minimum, every company should have somebody who can help them from an accounting perspective, someone who can help them from a legal perspective. And the team of a bank an accounting firm, and a law firm will provide an ongoing long-term guide for that business owner in helping them maximize their valuation. There are different types of accounting firms. There are those that focus specifically on closing the books, providing an opinion. There are law firms that focus specifically on transactional activity. On the other hand, there are advisory firms who have deep accounting experience, but take a more holistic approach to advising on future transitions, advising on capital structure. And similarly, there are attorneys who not only look at transactional law, but look at estate planning, look at wealth management to help tie together the owner and the company end of the equation. But the important thing to remember is you don't want to rely on just one advisor. Your first advisor can often provide you with an introduction to the other two who make up that magical triumvirate of advisors. But we strongly recommend that even though it might seem like a distraction of time, resources, or a call on financial resources, that you employ sooner rather than later, in addition to your banker, an accounting firm, and a law firm. We've mentioned several times the concept of capital, human capital and financial capital, because it's ultimately your capital that provides the platform for everything else that you're doing, provides you with the platform for your growth, and at the end of the day will be one of the measures of what your true valuation is. So when we think about financial capital in particular, while a bank is the steady partner in those sorts of capital discussions, it's important even at an early stage of development that companies understand there are different sources of capital, and there are different sources of capital that are appropriate for different stages of your journey. Banks are insured depositories. The good news is that means that they have a very inexpensive source of funding and will often be the least expensive source of capital raising that you have. The bad news is that that access to their own cheap funding comes because they're a regulated financial institution. And so we've all heard the term, somebody needs to be bankable. And that means underneath the bank debt needs to be some level of equity capital. And whether that be for a very small company, the startup family and friends sort of raise, whether that be for a technology company, the venture raise, it's important that there be that platform that underlines any sort of debt. Going back to the sustainability question, you cannot sustain the growth of the business indefinitely only on debt. You want to have equity as well. And there's other forms in between mezzanine debt that you can look at. Again, a bank can advise you on some potential sources of those other forms of capital, can introduce you to people that may be able to provide those or provide other sources of introduction. But it's really important when you think about your financial capital that you think about the right horses for different courses. A bank is a great measure of capital if it's short-term, bridge from I've got this long-term receivable and this short-term payable, a medium-term capital investment in a piece of equipment or even a building. But if you're looking at a long-term capital raise, something that's going to sustain long-term growth, you're probably looking at the sources of capital beneath bank debt. And again, a bank can provide you with an introduction to other advisors who can then turn you on to sources of that equity or mezzanine capital. We can be grateful in a sense for the time that we're living in right now because it's a very graphic reminder of the need to think about and anticipate change. If you are ahead of the game in understanding, you should be anticipating transitions rather than dealing with transitions. You will be a much more successful manager. if you take a long-term perspective and understand that valuation's built on value-added activities, on differentiation, not just on short-term expense reduction or even short-term management of this quarter's profitability, you'll build that greater valuation for your company. And you'll be richer, not only in terms of valuation, but in terms of your own knowledge if you employ a team of advisors to help you anticipate those changes, brainstorm different ways to deal with those changes, project different ways to expand and increase your valuation, and you will build a team of advisors that you'll then have for your next journey. We have an incredible lineup of people that fill those roles of advisors. I'm very much looking forward to hearing them. I know that you are as well, but it should be a great day.